Welcome everyone. It is Monday the 17th of December 2012. It's the last full trading week of the year. We're coming up to the end of the season, and as far as data is concerned, it looks like the calendar is absolutely jam-packed. On Thursday, Japan announces its policy decision. There's been a whole load of poor economic data coming out of that region lately, and as well they have a new elected government. I'm sure there's a lot of excitement about what's been happening with the yen crosses overnight, and so we will turn our attention to that in a moment. Tomorrow we have the Reserve Bank of Australia, and on Wednesday we have the Bank of England respectively releasing the minutes from their meetings earlier on this month. As far as UK data goes, on Tuesday we also have the core price inflation data coming out. On Friday we have public sector net borrowing for the UK. There's some GDP releases coming this week, so on Wednesday we have New Zealand, and on Friday we have the Canadian, as well a whole spat of data from the US, from the regional Federal Reserves. So we have the New York Fed reporting, the Philly Fed, and as well Kansas releasing the latest manufacturing data. As well in the US there's a whole spat of housing data to be released as well. So although we are in the last throes and in the last week of the season, there is a heck of a lot of data there, and I'm sure some of that is likely to cause excitement. As usual, we're just looking for those key technical levels from which we can establish bias, where we don't have to be messing about with the shades of grey, where our positive expectation will be based on the black and the white, and so hopefully we can take good risk-defined decisions. Just a handful of charts I want to be looking at this morning. There's not a lot to be looking at. I want to start off by taking a look at GBP AUD. Then we'll take a look at some of the positions that we've been building over the course of last week. And once that is complete, we're going to take a look at the yen crosses and try and decide whether to follow conventional wisdom or whether to be fighting the grain. So first off, if we start with the GBP AUD, on the GBP AUD we have what I call a nose pattern. So we had double bottom, and we've found support which has been established at the nose of that double bottom. Now that's coming in around the 5270 area. I don't remember if we looked at this last week, but as far as the structural point of view is concerned, as long as the price is able to hold above the nose, as long as it holds above 5270, then from a technical perspective it would be worthy of building a long positions, looking for those extensions north on this particular instrument. If it happens though that what we have going on here is some kind of head and shoulder structure, you can see that kind of building, and the price ends up breaking down through that support at 5270, certainly if it heads towards that 52 area, then on any kind of pullback, or even if you're chasing momentum, if you've been building that long position, start looking in the other direction, because if she ends up breaching that support, we can see it's quite a significant support. I would be looking for a very, very deep extension to the downside. Certainly if she's breaking down below that level, then it would not be unreasonable to be looking at GBP AUD sub 50 even. Alright, so back into the 49s, 48s, hitting fresh lows on this particular instrument. So this is very much on my radar right now. If I'm going to be building a long position, I'll just chase an hourly break. If it happens that I'm fighting the direction of the day, I do not want to be getting into that position, so I'll be buying on an up day. I will not be buying a dip at this particular moment in time. Okay, so that's the GBP AUD covered. she's on the radar, and we want to be keeping an eye on that. Last week we took the opportunity to start rebuilding long positions on the Euro GBP, and we entered into some multiple positions on this. Closed out most of the added positions by Friday, but just holding now the initial entry that we took last week. So I'm in around the 80-70 handle. I have a lower trend wall, and as long as the price is holding above that trend wall, then I'm prepared to hold on to the balance of this position. So either she's going to pull back and stop me out, or she will end up breaking north. And if it happens, now that she ends up breaking above the last high, so I'm looking for a move above 81.50. Certainly if she's hitting 81.70, then at that point I will look to be adding another position long onto this existing Euro GBP which I have on this account. As far as the pound Swissy is concerned, again, we talked last week about selling the rally. Particularly we were interested as she came and hit the underside of our trend wall. Again, in the live room we took the opportunity to get involved in that position. We were looking for the price to break back below the 50, 49.90. Once she was below 49.90, it was a little bit of a clear run, but I'm holding on to this position now. I've taken a few chips off of the table. She did give a very significant number of pips, almost to the tune of near enough 200, so 170, 180 pips. I took that opportunity to be taking chips off of the table, but now I'm really just looking for an extension to the downside, and I do believe as long as the price is able to remain, well, we can see a resistance established there around the 49.20 area, but as long as the price is able to remain below 49.20, 49.40, then it is fair and reasonable now to be looking for an extension to the downside. Again, if it happens that she rallies back up to the wall, I will look for the wall to hold again. This is an instrument that we've been trading now for almost the last 4 or 5 months, taking those short entries practically every single time, and it has been paying dividend. So I'll be looking to sell the rally again if she ends up back on the underside of the wall. It's been presenting very well risk defined entries. That really has been the key issue, but my expectation at this moment in time is to say, okay, I think I can get something a little bit further. I can get another breakdown, and if we see a breakdown below 48 now, and this week starts turning bearish, there's no reason why last week's bearish close, and why we can't have another bearish candle following the bear candle which was established last week. Okay, I guess that's what I'm trying to say. So being a little bit opportunistic with this, holding on to the balance, but if she starts breaking the lows, then I will look to be shorting this instrument again. And in a similar light, if we see Euro GBP breaking the highs, then I will be looking to be adding on to the existing position on that particular instrument. Okay, let's turn our attention towards the yen crosses. We saw all of the yen crosses rally. Last week, and on the market open, all of them ended up giving a very, very significant gap. All right, now there's a bullish perspective on this, and there's a bearish perspective on this, and in time-honored tradition, I guess it would only be fair if I covered both of those, because it is really going to come down to a question of interpretation. Overnight, in the live room, we chose to sell the GBP JPY, Euro JPY, and NZD JPY, looking for these gaps to close, and very quickly we were able to capture almost to the tune of over 100 pips between the three, and we chose to cash up at that particular moment in time. Now, I'm going to present the kind of conventional wisdom first, and explain what that would mean. I'll take USD JPY here as an example, but the conventional wisdom kind of demands that when you've had a significant gap, and gaps are usually a sign of price exhaustion. They're exhaustive in nature, and after a significant trend or after a significant rally, like the ones that we've seen on the yen crosses, right? So these have the euro yen and pound yen in particular have rallied more than 1,000 pips from their lows in the course of the last few weeks. The euro yen on its own rallied to the tune of 800 or 900 pips. It's a very, very significant rally, and now we've seen this gap. So it's a question of kind of interpreting this gap and saying, okay, is this a sign of exhaustion? So it means we're going to get a significant reversal from the previous trend, or is it the kind of exhaustion that says, let's have a break before we get a resumption of the existing trend, and let's just calm ourselves down a little bit. There's been a little bit of exuberance in the market, and maybe that is all that we're witnessing. So everything is going to depend actually on how the market closes this week as far as the bearish perspective is concerned. So if it happens that the price cannot break the high which has been established here, so in this instance on USD JPY, that is coming in around the 84.30, 84.40 area. If the price cannot go and break above that high, and if it happens that we get a close at, near, or below 83.50, which was the closing price last week, what that would mean from a candlestick perspective is that you would have had quite a large bearish engulfing candle. And when that happens, ordinarily, historically, whenever I've seen that happen on a weekly chart, I would be terrified of fighting the momentum that bearish engulfing candle establishes. And in the coming weeks, it would not be unreasonable that if you had a shallow pullback, to be looking for an extension to the downside of that bearish engulfing. Alright, so I'm talking here about what would happen on a weekly candlestick chart on the back of looking at the price structure and formation that we're seeing here on an hourly or on a 4-hourly chart. We're being a little bit predictive here and saying, okay, if the price is going and closing like that, what is that price structure that we're looking at? Right? It's going to be bearish engulfing, in which case you have to kind of err to the side of caution and say, do I really want to be fighting that momentum? Okay, so this is something that really depends on how the market closes this week. It's not something which is dependent upon the structure right now. Like I said, the conventional wisdom is that the gap goes and closes, but the real issue is that what happens after the gap closes, right? I guess that is the core of the issue, and maybe I hope I'm not mincing my words in any way and my explanation is coming out really clearly, but it really depends on what happens this week and how the market closes at the end of this week, whether you get that bearish engulfing or not. Alright, now what are my markers right now on USD JPY? My marker right now is last week's closing price. Okay, so that is the 83.50. And from a technical perspective, if the price is reaching 83.50, okay, we've got that gap close, and we already capitalized on a part of that, and I'm quite happy with what's been bagged already. But if it happens that the 83.50, and sometimes you see this, right? So it doesn't always happen that you get your gap fill and then the price carries on following through. It can also happen when you have a significant gap of this nature, that the last week's closing price ends up becoming a significant support. So the price comes and makes 83.50. This area holds as support, and the price is not able to breach it, and she starts heading and resuming the previous trend which had existed. Alright, so it is a very distinct possibility. So 83.50 this week on USD JPY is going to be the key price and the key level that I'm going to be watching. If it happens that that level is holding, as long as I can get risk definition, I will be prepared to play the long trade at or near that level with a very, very tight stop. It doesn't require much. It's the kind of thing that you would expect to hold pretty much near to the pip. Alright? Even it's worth some time, if you're not involved in that short trade and if you're not holding that bearish bias, just to put in a small position as a marker. Alright? So if you can see that it's rushing into the money, then at that point you can choose to add to that position a little bit and choose to add to it again. Cautioning just the kind of seasonal factors. We are coming up to the end of the year, and you kind of have some expectations about profit taking at this time of the year as people start closing off their books, and the smart money and the big money starts closing off their books and what have you. But it is going to be about this 83.50 area for me on USD JPY. In a similar vein, if we're looking at GBP JPY, we can see we are very, very far from a gap close here. Conventional wisdom says that the gap will close, but conventional wisdom isn't always actual wisdom, and maybe that is something to be bearing in mind too, and something to be considering. So what happens if this gap doesn't close and you end up getting a situation where you have a runaway, or what would be described as a runaway gap? So the price isn't closing and you end up hitting new highs. Certainly if the price is breaking above 36.40, then that would be quite a strong signal. And if you start seeing wave structure demonstrating that the price does not want to break down, and you start seeing support established, when you get runaways, you tend to get quite strong runaways. So there is nothing which is preventing this instrument, if that gap fails to close, from going and hitting the 140s, 44, 45 even. Alright, so just something to be kind of considering and something to be thinking about. Again, we would apply the same analysis that we've applied on USD JPY. As far as the bear position is concerned, it is going to be all about how the week goes and closes. So if the price does not break above the high here, if she comes and closes at or below last week's closing price, what it means is that you will have a huge bearish engulfing candle on your weekly time frame, and that would caution the longs, saying, just watch out, right? Because if that bearish engulfing ends up following through, it will give a very, very significant move. It will give a very, very significant move to the downside, but that is something that can only be established at the end of the week. It is really, really too early to say right now on a Monday morning that would be the case. Instead, we just take last week's closing price as our marker. That is the level that establishes bias. That comes in at the 135 handle. As long as the price is remaining above 135, at or near that price, if you had a technical long bias with good risk definition, it would be something that would be worth the attempt. All right, so it'll be worth the attempt, and in particular, if we see price ending up running away from the gap, then and we see that the gap does not close, it does not close completely, then we just kind of have to maintain or to keep an open mind about this particular issue. Okay, I've taken a trade on, and I'm going to turn my attention towards the Euro NZD, not Euro NZD, sorry, NZD JPY. Okay, so just in that light, I've taken a trade on NZDJPY, and I've allowed it the tune of about 20 odd pips, right? So 22 odd pips, and I've said, okay, here's last week's closing price at 70.60. I'm prepared to take a long entry here, saying if that level is holding, right? And quite often, we haven't seen these kinds of extensive gaps in the market for a very, very long time now. It is a rare occurrence where you get such a significant gap in forex markets, but it's happened here. So I'm saying, okay, if 70.60 holds it, I'm prepared to kind of play the long play, and if it happens that she ends up breaking down below that level, it will have cost me 20 pips to find out. So I've kind of chosen to fight. I've chosen to fight the momentum here. Last week in the live room, and again I want to turn attention toward this chart because we were looking for a trade entry short as she went and hit the underside of that wall. Because the price has gone and gapped to that level, it has me sitting aside on that short entry on this, right? So there's kind of room for caution here. To the downside, we're talking about sub 67 on this particular instrument if she does end up breaking down. But again, I think really it's a judgment that is better passed at the tail end of the week rather than at the beginning of it. Like I said, on all of these yen crosses, whether you're looking at NZD-JPY, whether you're looking at GBP-JPY, Euro-JPY, what really matters is how the week closes rather than how the week opens, and that is what will give you the cleanest or clearest signal about what is to come, and whether there is really going to be a significant reversal from these levels, and whether this gap was exhaustive in the sense of signifying a trend reversal, or whether it is something which is just a pause in the current price movement. Okay, so let's just take a look at this. There's a couple of questions here. Right, so would bearish engulfing not need to engulf last week's price? Alright, the forex markets are a little bit different to the equity markets. In fact, they are significantly different to the equity markets, just in that because the equity markets open and close on a daily basis, you tend to get when you have an engulfing pattern from a candlestick perspective, that engulfing pattern tends to be very clear, right? Now, in forex, when you have an engulfing pattern, to have an engulfing pattern, you need to have a significant gap. And because the markets don't open and close on a daily basis, they are 24-hour markets, it's very rare that you end up getting that significant gap in forex, right? So this is the first kind of issue. The next issue is to recognize, so if you understand that to get a real engulfing candle in forex, you need to have, almost as a precondition, a significant gap first, right? And that is what would give a meaningful engulfing candle. So here on the yen crosses, we've had significant gaps, right? So this is the first kind of issue. Now, whether that candle is engulfing or not now, whether that candle is engulfing or not now, it really depends on the close. So if you get a strong bearish close, even if it does not cover the body of the previous candle, it would still fit the category of what is termed an engulfing candle, right? So it's a huge bearish engulfing candle. It started above and it went and closed. Below. That is why we would be monitoring the last week's opening price in particular. I understand what you're saying from a kind of technical, clean, clear technical definition. That you're looking for some kind of outside bar where you've had a close going and closing below the open of the previous candle. But I'm talking about engulfing. I'm talking about a candle which has opened higher and gone and given a strong bearish close into the previous candle, or at least that is what I'm meaning when I'm using the term. Okay, so if that kind of makes sense. But like I said, it is all now going to depend upon how it closes, rather than where we are at the moment. Often enough, I don't say often enough because these types of situations, they don't happen very often, but it has been known to happen where you have a gap like this, and what happens is that the price pulls back to that level, finds support at last week's closing price, and then rushes off. And then on your weekly chart, what you end up looking at is something like this, where you have a wick where the price pulled back to find support. The price ends up pulling all the way back to the open, and then ends up rushing off in that bullish direction. Right? So it's just something to be kind of aware of, that if it is going to find support, the support level will be at last week's closing price. If you're going and getting a close below that area, it changes everything, and at that point you are looking at the makings of an engulfing candle. What really matters is how the weekly candle closes, not how the hourlies and the 4 hourlies are behaving at this time. We're talking about taking stock or developing perspective on a longer term wave structure, rather than just the 50 pips or 100 pips available here on a gap close. Alright, that is I guess the essence of is the essence of what I'm trying to convey here. Alright, so that's your lot really for this week. It is all I wanted to cover. The rest of them, the Euro, USD, Pound, they're not exciting very much. So just the Pound, Swissy, Euro, GBP active positions. I've taken a small position on NZDJPY long, just looking for that last week's opening price to hold and to provide some element of support. If it's able to do that, then I suspect it will be a very good trade. If it's not, it's okay. It does have good risk definition with hardly a risk of about 20 odd pips in that particular trade. So that's it really. If there's no more questions, I'd just like to thank everyone for attending. Today has been the kind of season finale, so I'll be wrapping up the presentations here at FX Street, and we will be back next year, I believe, on the 7th of January. Right, so in fact we'll just have a quick check and make sure we've got the right date. Yeah, so I'll be back on Monday the 7th of January. If you pre-register, FX Street will send you out a reminder when that's happening. Again, thank you all for attending this time and for the previous weeks. I hope it's been a beneficial experience. Thanks as well to the team at FX Street, and as well the best of season's greetings to you all. I will see you in the new year. Okay, Mr. Flavia Usher, last minute question coming in there. Right, what are my thoughts regarding gold? You know what? Right now I would just wait. Right now I would just wait and wait for the new year. Only take a position if a chart is displaying momentum, and we're not seeing a heck of a lot of momentum right now. If we were just taking the short term, if we were just doing some short term analysis on this instrument, would say the most recent momentum was to the downside, and resistance has been established at just above 1700. So from a technical perspective, she's a short as long as she remains below 1700, but the lack of momentum would have me cautioning taking any kind of position. The only charts where I have long-term perspective is the Euro GBP and the Pound Swissy. Otherwise, I'm waiting for a situation to develop on GBP AUD. Like I said, based upon the current technicals, it's the long, but if it happens that she ends up breaking down below 52.70, heading into 52.50, at that point I believe it would be worth going heavy on the shorts on this particular instrument. The yens are on watch, right? So it's just a case of having it on the watch list. It's going to be very much a case of watching how the week closes, whether you want to be trading an illiquid market between Christmas and New Year's. It'll be a week for addicts and idiots, and the smart money would be sitting aside, and I'll be one of those. I've booked a holiday, so I'll be quite happily sitting in the sun, trying to forget the markets at that point. So just caution. Just caution. It's the kind of last throws of the month. If you see momentum developing in any direction, it's worth putting a little bit on chasing it, but building a position for something long term, I would kind of sit back and just wait, right? And we'll kick off the new year and see how things go then. Okay, guys, I think that really is the lot. Yeah, so if there's no more questions, we'll call it a day. Again, thank you very much for attending, and I'll see you all in the new year.